On Business Incorporated today, government suspends sale of its stake in Telecomegypt. Ethiopia Airline celebrates 25 years of travels to China. And Kenya protest suspended as main opposition resorts to talks. Good afternoon. Welcome to the very first working day in the month of April and the second quarter of 2023. So we begin Business Incorporated as usual with the markets. Looking at equities in Nigeria, unfortunately, it's not smiling, not looking good at all. As it's down 1.22%, I hope we do not lose the positive sentiment that we have for the first quarter there. South Africa is, however, on the flip side, 0.51%. And then we look at Egypt. Very good, blossoming, in fact, 2.24% at 17,069.02, while Kenya closed Friday in the positive, also almost 1%, 0.91%. We move over to the Middle East now to see what's going on there. What we see in the Middle East is we have Abu Dhabi in the red, in the green, 0.68%, I beg your pardon, 0.68%. Dubai also follows suit at 0.63%. Is a positive day for the Middle East markets. Saudi Arabia also positive 1.26% at 10,770.44. Qatar follows suit. A glorious day for the Middle East markets. Well, let's see what's going on in Europe. Doesn't look so good there, as we saw that major oil marketers and producers led by Saudi Arabia announced a surprise production cut of more than 1 million barrels per day. In fact, 1.15 million barrels per day. Well, let's speak to Lars Holter now, joining us from Deutsche Welle to give us how this is being felt in the different markets and different sectors in Berlin. Hi, Lars. Good afternoon. So, tell us, what has been the reaction of these unexpected cuts? I mean, they're supposed to have their meetings today, and even before the meeting, we heard about that cut.
Yeah, Saudi Arabia took the lead here within the OPEC Plus group, the country cutting its own production by 500,000 barrels a month. And some other countries have been following the lead, namely Iraq, the United Arab Emirates, Kuwait, Algeria, and Oman. Altogether, we're looking at production cuts of over 1 million barrels. And that's on top of an earlier decision by Russia to also cut production by 500,000 barrels. It has caught some in the world markets by surprise, especially the United States. The Biden administration had just called on OPEC to actually increase production, partially, of course, to keep prices low.
So what does this mean for markets today? How are they reacting to it, especially in the short term?
Well, market reaction was swift. Oil markets gained traction right away with crude up $3 in early trading. And some analysts say that they expect gains of up to $10 a barrel over the next couple of days and maybe weeks. Now, that would definitely be a drastic increase. The producer countries, of course, know that, and they know that also puts a lot of pressure on other economies. But they say that current economic pressures have actually forced their hand. They are looking not only at global inflation rates, but also at weakening economies. A Saudi energy official calls this step, quote, a precautionary measure aimed at supporting the stability of the oil market. It seems the cuts are a response to recent problems in the banking sector. Remember, we just had the collapse of Silicon Valley Bank in the US, and we had some troubles at Credit Suisse in Switzerland. So there were worries over what the fallout of another banking crisis could be and what it could possibly do to future oil demand. Less demand means weaker prices for oil, and that, of course, goes against the interest of the producers. So they took these precautionary measures.
Yeah, precautionary, they call it, but the impact, of course, goes deep, way deeper than what they say. But do you see this as being, this hike, I mean, as an incentive for countries to move faster when it comes to switching to green energy?
Likely, yes. There has already been a bit of a change here. And just this morning, we got some interesting numbers from a new study in Germany. See, Germany has been working on an energy transition for years, trying to move away from fossil fuels and shutting down nuclear, all to be replaced by renewables, mostly, of course, wind and solar. But Germany has also been suffering from a hefty case of NIMBY, not in my backyard. So for years, people have said they want more wind turbines up, for example, but they are fighting every project that is close to wherever they live. So it's been really hard to make any progress. In fact, it takes between 5 and 7 years to get a new turbine up in Germany. However, now a new survey says that 82% of Germans are saying they want more renewables even if they are built in their own neighborhood. Rising energy prices, much of it is of course due to Russia's war in Ukraine and an embargo on natural gas from Russia, have changed people's minds apparently. There is a better understanding of the fact that demand has to be satisfied and that supply has to come from somewhere, including maybe the fields around your own hometown. So maybe, hopefully, we're seeing a faster switch here.
Yeah, maybe we're seeing a faster switch, but unfortunately, I mean, everything has to do with infrastructure. But thank you so much, Lars, for giving us the perspective from Berlin. Now let's move over to the UK now, where Juliana is standing by. Juliana, good afternoon. Good to have you. I saw you talking with Laddie earlier today, but it doesn't look so good for you guys there because the British Passport Office workers have started their 5-week strike. Teachers are threatening, and it doesn't look good at all. No end in sight.
No end in sight, Innie. Good afternoon. It's pretty bad timing as well because, of course, we just started a 2-week break for the Easter half-term holidays, and these coordinated strikes are certainly going to affect you, whether or not you are a parent or somebody that wants to go away on holiday. I suppose we should start with the breaking news, which came in this morning, and that is that the National Education Union, over 98% of members voted against the government's pay offer. So Gillian Keegan, who is the Education Secretary, sat down with union bosses over the past couple of weeks, and they offered a £1,000 one-off payment for all teachers across England and Wales, as well as a 4.3% pay rise from September. And at the time, a lot of people were breathing a sigh of relief, thinking that's it, that's the end of the education strike. That's not to be the case because members voted overwhelmingly against it. In fact, they went as far as saying that the pay offer that Gillian put on the table was insulting and that it's just not going to do enough to stop teachers from going to food banks or even dipping into their own purse to make sure that their students have scissors and some Pritt stick to use when they are conducting their classroom activities. I do actually have a statement in response to the ballot from the Prime Minister's spokesperson, who said, with a week of classroom time already lost, that was due to the last strikes, and with exams fast approaching, this is extremely disappointing. The NEU, the union representing teachers, have called for more strike action. The decision will also result in less money for teachers this year, with the independent pay review body now looking at pay for next year only. So no end in strike, because it does appear as if the government are doubling down on the offer. They say if you don't want that, there's nothing else available. So there will be 2 strikes on the 27th of April and on the 2nd of May. Now, very important for our viewers watching in the UK or anybody watching across the world that is a dual national with a British passport or a passport that's due to be renewed, as you just said, postal passport workers, I believe there are about 1,600 of them, have begun a 5-week walkout. And again, it's all those same buzzwords. They're not happy with job, pay, pensions, working conditions. Basically, they're not happy with their job. They're going to be walking out over 5 weeks. This is very important because, of course, this is probably about the time that if you've got an old passport or an outdated passport, you would be renewing it so you can get abroad and get some sun in the summer holidays. That is going to be a significant issue for you if you haven't already put your passport application in at the moment. Already, we've just checked today, and all of the fast track options are no longer available. So if you've got an extra couple of quid in your back pocket, you can typically get a faster appointment, no longer available. The the government are saying if you was to put your passport in tomorrow, it would be available in 10 weeks. But union bosses are laughing at that, saying that is absolutely not the case. There are about 1,900 staff that work on renewals and new applications, with 1,600 of them off. Plus, already, I think there's about a 50,000 person backlog of passports. You're just not going to get it in time. So the industrial action is obviously doing what it's supposed to do, hitting at the Achilles heel. Not great for the government because they're on recess at the moment. And of course, they've got to put people around the table. Civil servants in this country not happy that the education union bosses and the health union bosses are able to speak with the government for negotiation. But the 250,000 odd civil servants who work in this country and are pretty much not happy with how things are running in their place of work, they have not had that opportunity, which is why they're going to all be doing a coordinated strike, I believe, on the 29th of April, where we're going to be seeing 250,000 people hit the streets of London as we did last year.
Yeah, not good times. Not even for just the UK. I mean, same thing is happening in France. I mean, they've been at it also because of pension terms and all of that. But it seems this has fed into the factory output because we see it dropped in March to mark the 8th straight monthly decline.
Yeah, not great for the manufacturing industry. As you said, they've had 8 months of constant decline. This is all about the S&P Global Index, which is a great way to have a forensic look at specific industries. They've had a look at how the manufacturing sector has been doing in the UK. And it's fallen yet again. I think it fell from about 49.7 in the month of February to 47.3 in the month of March. And anything below 50 represents a contraction in that sector. I think economists and observers are saying pretty much the same thing, really, that this is all about demand. The demand is just not there. If the demand is not there, you don't produce. Manufacturers obviously see their orders decline. So it's not great. I think, there was a lot of optimism and robust positive sentiment following the Chancellor's spring budget, saying that, the UK is back to business, inflation is going to be going down, we are going to grow the economy. Unfortunately, all of the data that's come out, not only of the government's own budget for responsibility, but also independent data is showing that actually, the economy is declining. All of the data indicates that we're not reversing the trends. We appear to be going much more forward with them. Very disappointing numbers outside of the manufacturing sector today.
And I just wonder how this is feeding into investors' sentiment and the markets.
Not bad, actually. We do obviously have a very short week. It's Easter on Sunday, Good Friday this week. So we've only got 4 days on the market. But I think there's been a boost on the oil scene, which has really pushed up the oil majors, which has driven up the FTSE All-Share at intraday, which is up 0.67%. The FTSE 100, that's up by 0.79%. And the FTSE 250, the domestic market, that's down slightly by 0.04%. I think that was dragged down by the manufacturing sector. In the currencies market, the British pound is currently trading up against the US dollar by more than 0.5%. The British pound is currently unchanged against the euro. I think £1 would get you about €1.13 at intraday. And sterling is trading up against the Japanese yen at intraday by 0.5%, Tini.
Thank you so much, Juliana. Wish you all the best with all of the strikes and not so good news going on around there.
Thank you.
All right, let's move over to Asia now, where markets largely rose on Monday as investors further digested key manufacturing data in the region. Brent crude futures and US West Intermediate crude futures also affected this market. Let's look at the numbers now. The Nikkei 225 looking good at more than 0.5% in the green. Shanghai Composite also looking good, even better, 0.72%. The Hang Seng Index, 0.04% in the green. Kospi alone is in the red at 0.18%, and the AX200 of Australia at 0.63%. Let's take a break now. When we come back, we'll give you more stories here on Business Incorporated, and it's only here on Channels Television.
From the predictable to the unpredictable.
Welcome back to Watching Business Incorporated here on Channels Television. Just before we move on with other stories, out of curiosity, want to find out what's happening at the NGX, dropping it 1.22%. At intraday, it's not even a close of trade yet. So we have joining us Charles Fakroha, the Chief Operating Officer of Super Commercial Trust Limited, to tell us what's going on the floor of the exchange and if this is how the market will close today. Good afternoon, Mr. Fakroha. Thank you so much for your time. Who's driving the market down more than 1% at intraday?
Yes, thank you very much. You see, it's a market, and first trading day for the week, we expect this kind of horse trading here and there, buying and selling. You know, traders just came from the weekend, and people are trying to see how to set the pace. So what we're experiencing right now in the market, well, normally there's something we say, it is not over until it is over. Maybe now the big boys are trying to take some tea. Before you know what, they come back again and the direction of the market will change. But for me, looking at what is going on in the market right now, I see a mixed trade. And of course, towards the end of the market, we might see a little improvement in the market.
So which of the stocks are catching the attention of investors today?
Yes, well, I will be very, very, I don't want to advertise any stock, but I will say, well, all the stocks are catching the attention of investors, but of course, we still have some that are gaining, some that are losing. It's normal, you know, as people continue to buy and sell, prices will change, you know, and of course, it also depends on we are finished, the first quarter is gone, a lot of portfolio dressing, window dressing and all that is gone, so people are just setting the pace for what they want to see happen in the second quarter, and of course, for the month of April. Traders are still very, very cautious. So the stocks that are up, there are some stocks that are down, of course, depending on how the supply and demand is going on.
And how much of a factor would you say the earnings has played, you know, in the sentiment that we are seeing now in the markets?
Yes, you know, most of the Nigerian investors are fundamentalists. That is, they look at the fundamentals of the company. So some of these companies that have announced their corporate action, we are seeing, of course, some of them have also marked down. So that means if you have benefited from it, then the price is already down. So it's also an opportunity for some persons now to take advantage. Take, for example, I think Dangote Cement has been marked down as a 30th. And of course, so that means if you are not in that stock, obviously, you won't benefit from the corporate action. So the sentiment is there, looking at companies that have announced some returns, payment to their shareholders, and we are seeing more and more investors, you know, looking at that direction. And again, those who have already benefited, the price is down based on the marking down. Some persons might want to go into those companies again, I mean, getting it at a very cheaper rate, and of course, prepare for the next coming increase in the price of those securities.
All right, Mr. Charles Fakroha, the Chief Operating Officer of Super Commercial Trust Limited. Thank you so much for your perspective this afternoon.
Thank you very much. Enjoy the rest of your day.
And you too. So let's move over to Kenya now, where the main opposition has agreed to suspend protests planned for this week, and said it would enter talks with the government over demands for electoral reform and steps to reduce the cost of living. Opposition leader Raila Odinga made the concession hours after President William Ruto called for an end to the protest that he said had left 3 people dead and hundreds of others injured. Ruto also called for talks in Parliament to discuss the opposition's grievances about the Independent Electoral and Boundaries Commission. Meanwhile, Kenya's foreign exchange reserves plunged the most in at least 13 years in the 3 months through March, as rising costs for import drained dollars from the central bank. The East African nation's reserve dropped 13.6% on a quarterly basis to $6.43 billion at the end of March. That's according to the central bank's data. And that's sufficient for 3.59 months of import, compared with a requirement to maintain at least 4 months of coverage. The reserves dropped to the lowest since September 2015. Meanwhile, the Egyptian government has suspended the plan to sell a stake in its state-controlled operator Telecomegypt, and that's because of economic conditions and volatility in the market. The government of Egypt currently owns 80% of Telecomegypt and was formerly considering selling a 10% stake as part of a wider strategic aim to sell off stakes in public enterprises and boost public sector investment due to increasing economic pressures and shortage of foreign currency. It isn't clear if the country will revisit the sale once the market improves, or if the plan has been put on hold indefinitely, given the ongoing local and global issues surrounding currency, inflation, and geopolitical tensions. Well, Egypt has been hit hard by the Russia-Ukraine war, with various reports of international investors pulling out capital worth around $20 billion. The nation is therefore seeking to sell stakes in state-owned assets to raise cash in order to help balance the books. And data from the Reserve Bank of Zimbabwe shows that the country's manufacturing sector is on a massive expansion push after consuming roughly 70% of all foreign currency injected into the economy last year. The mining sector is the biggest supplier of foreign currency in the economy, as records show that in 2022, 75% of exports came from mining, with the biggest user of $3.8 billion being the manufacturing sector. About 70% of the money was put in productive sectors of the economy as well as manufacturing. And we celebrate with Ethiopian Airlines as they celebrate 50 years of the commencement of its service to China. The airline made its first flight to Shanghai on the 21st of February 1973 and operated there for a while before it shifted its flights to Beijing on the 7th of November 1973, which is one of its very popular destinations in Asia. Ethiopian Airlines is the first African carrier to fly to China and has been connecting the country with the whole of Africa for half a century now. China is now one of the biggest markets for Ethiopian Airlines, with more passenger services to 4 destinations in the country. China-Africa relations is projected to grow significantly in the coming years, and Ethiopian Airlines continues to serve the needs of the traveling public by availing some of the connections to Africa and beyond. Now, following the end of the Eskom Uganda Limited EUL concession on the 31st of March, that was on Friday, Eskom has assured that the smooth transfer of assets and interests to state-owned Uganda Electricity Generation Company has taken place. Eskom says the facilities were well maintained in accordance with prudent utility practices and were handed over in sound working conditions as per the concession and assignment agreement between the 2 utilities. Over the period, Eskom ran the plant at an average availability rate of 96.6%, which the power utility says is a commendable performance. During Eskom's operation of the plants, EUL invested in training and development of technical skills and competencies, which have benefited the overall electricity sector in Uganda. EUL also contributed more than $50 million to the Ugandan economy through taxes and levies, and invested $3 million in communities. Equally, Eskom is striving to consolidate its resources and improve the generation fleet performance in South Africa to ensure reliable power supply for the country. And we move over to Ghana, where interest rates are up marginally on the treasury market as government secured more than 21.43% from its latest treasury sale. The increase in interest rates was expected due to the hike in the policy rates of the Bank of Ghana to 29.5%. Interest rates inched up as the central bank increased its base lending rates to banks last Monday, which was the 27th of March, to check the high inflation. However, some market watchers argue that the cost of borrowing, which is lower than the yield on treasury bills, could force investors to prioritize foreign currency investment. Both the 91-day and the 182-day treasury bills went up marginally by 0.51% and 0.42% point to 19.38% and 21.85%, respectively. So those are the stories we have for you on Business Incorporated for today. We'll do it again tomorrow. Enjoy the rest of your day. I'm Ini John Mekwa.